Hello, everyone. We are well into the month of April, and welcome back for another weekly update for the week April the 4th to the April 8th. And last week was really an amazing week. Some of the Forex pairs resumed their original or previous trends. We're gonna look at that in just a minute, and almost all of the major pairs gave us lots and lots of opportunities to make lots of pips. In fact, last week there's a total potential of approximately 1,140 pips for all the major pairs, except for the British Pound USD. That was a difficult one to trade, but we're going to look at all these pairs one by one, and just like last week, we're going to compare them side by side with the LEOD or the lazy end of day trading charts. Okay, so we're going to start with the Euro USD. Okay, here we've got the Euro USD weekly chart. Again, this is a simple chart with just some of the moving averages on here. Let's take a look. This is the 50 simple moving average. This is simple. Here we've got the 21 EMA moving average, and here we've got the 8 EMA moving average. However, on most of these charts, I've taken off the 8. I'm mostly concerned with the 21 and the 50. I've left the 8 EMA on this chart, and it's indicated in yellow, but the subsequent charts, or the charts that you will see after this, will not have the 8. But basically, you'll understand what I'm talking about when we talk about pullbacks, retracements, and then trend continuations. So take a look at the weekly here, and you can see with this currency pair price last week with a huge candle completely broke the upper trend line. We had previously drawn a upper trend line. You can see that with the magenta line right here, and it's on its way to a previous resistance high right here. This was also an engulfing candle. Can you see that this white candle completely engulfs the previous week's candle? Okay, so I expect this pair to go higher, and there's still lots of room for further movement, at least another 200 to 300 pips. And also, you can see price will be coming up to meet the 100 moving average, which, as price continues going sideways here, from here to here to here to here to here, this dash line will be coming down a bit. So this will be an area of convergence here, or confluence, I should say. Confluence meaning different clues coming together, and once price comes up to here, it might retrace and pull back, possibly before going higher. Okay, so this week we're going to turn down to the daily chart. This week I still see the uptrend. We're in a continuation. Okay, continuation uptrend, but you want to trade either the breakout above the high of this candle, or wait for a pullback and then continuation to the upside. Now let's go down to the daily chart. You can see what I mean. Okay, so here price has gone up pretty high, okay, and it seems to be going higher. However, you can wait for a pullback down to at least this area right here, okay, and or wait for a breakout above the wick high here. You see the shadow or the line above this small little bodied candle. Okay, so you can do that. Wait for a breakout, or just wait for a pullback, and let's see if price can pull back further. Now, looking back at the previous week, you can see right here. This is what we mean. See how price broke up much higher, came up to a resistance area, and then started pulling back with these black bearish candles. So you can see 1, 2, 3, 4, 5, 6 candles. So this is a perfect swing setup on the 821 charts, as we had taught in the course. You're waiting for a pullback and then waiting for one good bullish or white candle to the upside. That was your trigger candle right there. See, there's the big clue with that one white candle. Would have gotten in right here at the open of the next candle, you would have gained approximately 200 plus pips, and that's what I mean. So last week, this currency pair gave us lots and lots of good pips. Your stop loss, if you would have entered right there, your stop loss would have been just below the 21 right over here. Okay, and I'm going to switch now to the LEOD charts. You can see again, we missed the entry right here. Here with this candle right there, that was the trigger candle. Again, we would have drawn a trend line like so. This candle broke the upper yellow line. We would have gotten in at the open of the next candle. You can see down here, it's also confirmed the histo bars are above the zero level, and the blue line is the RSI line is above the yellow sentiment line, and the blue line is also above the 55 dash level. So you can see sentiment is increasing on this pair to the upside. The histo bars are increasing, and but again, the caution is wait for price to retrace a bit. Okay, wait for price to retrace, or wait or play the pullback on this one. Now we go to the British pound USD. This is the one pair that almost didn't give us, it was really hard to trade, and I'll explain in a second. Last week I mentioned that we were trending lower. We are overall trending lower. You see this, we've made a lower this is a weekly chart. We've made a lower low here to the previous low, and even though price is retracing on the weekly chart, I expect price to come down much lower and eventually possibly come down to this lower trend line right here. See, the histo bars are also below zero. However, we're caught in kind of a sideways pennant. You can see that right here. Okay, you can see price has gone up, down, up, down. This is the daily chart, everyone. Okay, and uh, and you can see the last candle in the close on Friday. We had a huge down day, so you kind of have to just watch, wait, and see. And I'm going to zoom in a little bit here so you can see that a little bit clearer. You either want to play the breakout below the shadow right here, okay, or wait for price to come up a bit higher. I mean, basically, you can wait for price to come up higher to this area and take a sell trade again, or wait for a breakout to come down lower. But again, we're kind of going in a sideways pattern here. As this pair is a bit difficult to trade. I'm going to go down to the British pound USD 4-hour chart. Here we could have gotten an entry for the LEOD, because you can see with this candle here, it closed below the lower yellow line. The blue line is also below the 45 dash, the lower 45 level here, and below the yellow line. The histo bars were getting smaller, smaller, smaller toward the zero, showing that the uptrend, the previous uptrend, was losing a lot of strength. And again, we could have opened a trade just below the 50 moving average, right about there. We would have made some pips, but again, you see price. Even on this 4-hour chart has retraced with a pin bar. The next 4-hour candle was a doji. So a bit of inconsistency there, not that clear. On the daily chart, you can see where we are. We're waiting for another candle to close below the lower yellow line. Now this is the daily chart. However, let's draw in our trend line. Okay, so not only does a candle have to close below the trend line, we could also take pretty well a sell stop order. See below this candle right here? So somewhere right in there, and that would be somewhere around the 140, uh, 80 area. We could take a sell stop order, and then hopefully catch price to test the previous support low to the left side right here. Okay, but again, you can see the filters here below. The blue line is still above the yellow, so for us to take a sell trade, the blue line has to be below the 45 level as well as below the yellow here and the histobars. You would have to see at least the histobars below the zero. Again, this is a wishy-washy pair, difficult to trade. Now we're going to switch to the Australian USD. Last week we were in a pullback phase. I said that we were in pullback, and I said wait and buy with evidence. Now, what does that mean? Again, wait and buy when you see evidence. Well, let's switch to the daily chart. Okay, so you can see the previous week we were in a downtrend. This is okay, uptrend here. That's the major. So the major prevailing trend is up. We're in a pullback phase, pullback toward the 8 and 21. If you want, I will draw in the, for you, I'm going to draw in the 8 exponential moving average. There again, there it is. So in a pullback, price went actually between the 8 and 21, waiting for one good candle to show bullish evidence, and there it is. You see that? That is a bullish engulfing candle. It completely engulfs the previous black candle right here. This was the end of the previous week on the Friday. This first candle was the Sunday, Monday trading day. And if you would have gotten in right there at the open of the next candle and put your stop loss just below the red line right here, you would have made some pretty darn good pips. How many? How about 140 pips approximately, or even more than that? Okay, so that's what I see with. That's what happened. I'm sorry, that's what happened with the Australian US dollar. This week, we are in an uptrend continuation, and I expect price, again, this is the weekly chart, I expect price to continue from here, going up to at least this area of confluence. You can see we have the dashed line, that's the 100 SMA. We've got a trend line that's coming down. We've also got a huge resistance area in this pink rectangle you can see. So, but I do expect price to go higher. And the only thing that you have to figure out is when is it a good time to get in? If you get in now, yeah, you could do that. This is a weekly engulfing candle. Okay, you can see that weekly engulfing. So you can get, if you get in now, you would have to put in a stop loss below the support here. Okay, but I'm going to switch to the daily, and this is what you can do. You can see on the daily chart here, we did finally break resistance area on the Thursday. We had a black doji, or kind of a bearish doji. We had an up candle. It's a pin bar. You can see that. It's a and with this one, what you want to do is play a breakout. You can take a buy stop order above the high of this previous candle right there. You see that black doji? So just above there, you can take a buy stop order, and your stop loss would be down below the 21 right there. Okay, that would be your initial stop loss. Once the trade goes higher in your favor, then you can raise the stop loss to at least below the this bullish pin bar right there. Okay. That would be the conservative stop loss here. The aggressive stop loss would be below the pin bar, this white pin bar that closed on Friday. Okay, so again, switching over to the LEOD chart. Some people and a lot of people have emailed me saying that they find this to be fairly clear. It's easier to see. Again, you can see here, if we're looking at just general information, technical analysis, the blue line, that RSI, is above the yellow line. The yellow line indicates trading sentiment. So right now there's a bullish trading sentiment, expecting price to go higher. The histobars are above the zero level. You can see that right here. The last histobar seems to be getting higher, or like longer, and will soon cross the this red dash trigger line. You can see that right there. That's the signal line. So once a histobar closes above that line, price is going to go higher. So that's why, looking at this chart, you can see that it's probably best to play a breakout above the previous black candle, black doji right there. And the reason is because it seems to be going sideways a bit. And once it does, once it breaks here, it should go higher. Okay, so now we're in the New Zealand USD Weekly. Again, you can take a look at this chart, and this is another pair that has broken the horizontal trend line. You can see that right here. This acted as a resistance. So we have the candlesticks or the price action, price coming up to meet here and coming back down. So there's one touch, price coming back up again, being retesting the previous high, price now coming back down. So there's two touches. And all along, notice that we're making higher lows. So this is a higher low over the previous lower low right here, making a higher low here to the previous lower low here. So price is being squeezed in finally. Uh, s- um, Pushed right through this ascending triangle. That's what this is called, where the lows are getting higher, but the resistance is about level or even here. So this is an ascending triangle, had a huge bullish engulfing candle. Again, do you see that? This white candle completely engulfs the previous black candle. Okay, so this week I see the uptrend continuation, continuing to the upside. We've got lots of room from here all the way here, and that means once price goes higher, it's going to move at least another 300 pips or so. And again, what you can do is buy the breakout or just wait for a little bit of a pullback. Let's go back to the daily chart. Okay, so we already, you can see last week, price went up really high, and we actually are in a pullback phase. Okay, we're pulling back. However, we did have one huge pin bar, which indicates that the buyers are resisting price from coming down lower. Buyers are trying to push price higher. And what you can do is again is play the breakout just above the high of this candle right here. So this pair last week also gave us some pretty good pips, 200 pips in total. And this was a great pair to play last week. Again, you can see the familiar uh, the previous week here, price went up high, pull back, pull back, pull back, pull back, would draw a trend line, wait for one good bullish candle. There it is. Do you see that? Not only is it a one good strong bullish candle showing that the buyers are coming into strength, but it completely engulfs the previous black candle. So getting in right there and having a stop loss below the blue right here, this would have given you some amazing pips, everybody, at least 200 pips or more. Okay. And now I'm going to switch to the New Zealand. So again, you can see we're in a bit of a pullback. You want to wait till price comes back either here, then looking for buying evidence to the upside, or just waiting for a breakout here. Okay, but again, you can take a look at the previous week. You can see uptrend, down, 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 down. We drew a trend line. This candle actually broke out. So using the LEOD charts and waiting for this candle to break out above the high yellow line right there, looking down below for the filters, the histo bars are above the zero level. Right here with this candle, all the way down, take a look. The blue line above the dashed 55 level and above the yellow sentiment line. So getting in right there at the open of the next one, see right there, would have given you, well, you would have been about 100 pips in profit, okay? Even though it's declined by just a wee bit. So that's the New Zealand USD LEOD chart. Fine. And oh, we've got a couple more charts to go. US CAD. Let's take a look. This is the US CAD weekly chart. The US dollar has showed its weakness over the last, well, 1, 2, 3, 4, 5, 6, 7, almost the last 2.5 months, right? Look, it reached a high here, and notice I had put a pink triangle because this was a bearish engulfing on the weekly chart. And I don't know if you guys can remember, but one of your lessons, one of the PDF files I sent you, showed you that this was one of the strongest indicators of a reversal pattern. When you see a weekly black bearish engulfing candle, it would show that the price would be reversing, and it did all the way down to here. So now we have, it looks like price is going to continue going down. However, be careful, we're close to the support. You might want to wait for a retracement or pullback, and let's take a look at the daily chart. Okay, let's just make that a little bit bigger. Here's the daily. You can see price came down to the support. Um, we have a pin bar, a bullish pin bar. We have a doji, so price may go up higher to about this area. Then you may want to take a sell limit order to the downside, or just again wait for a breakout below the shadow of this white pin bar right there. So taking a sell order right there. The histo bars are below zero. Okay, again comparing that to the well, you can see the opportunities here, many opportunities for the LEOD trade. Again, it was this candle actually broke below the bottom yellow line. You can see that, but because this candle did not break below the trend line, you can see the trend line here. We joined the this previous swing low or a valley, another right here, another swing low. Once you join the 2 points, it draws the line, and you could have gotten in with an aggressive pending sell stop order, but somewhere right there, about 10 pips, 15 pips below this black candle, below the trend line. A sell stop order right there, you would have made a lot of profit. On the LEOD, you would have made at least 180 pips. Let's go back to the daily chart again. You can see the swing sell trade here. This is a pullback, okay? Pullback, draw a trend line, and again, waiting for one good, in this case, bearish candle. There it is. There is the bearish engulfing candle, completely engulfs the previous candle right there on the, and that was the candle represented by the closing Friday of the previous week, and getting in right there, okay, would have given you with this chart, the 821 chart, would have given you 259 pips. So the 821 swing trade would have given you 250 plus pips. The LEOD would have given you a little bit less than that, but again, just comparing one chart to the other, okay? And just really quickly, you can see oil is retracing a bit, so I think oil is going to come down. It's going to retrace a little bit more. I want to take a look at the daily. Yeah, you can see that it's hit a support area right here. So price for for oil may come down a wee bit more and then bounce back higher. It seems to be retracing or in a pulling back, and um, that could coincide with the U.S. CAD. The U.S. CAD is now getting going higher because of U.S. strength and Canadian weakness because of it's tied into the oil price of oil in the oil commodities business. So in this case there, you might want to wait and just see and just wait for the pullback to finish before taking a sell trade here, okay? And again, you can see on the LEOD, this is the oil chart again. It has broken the lower trend line. It has broken the trend line. It is the black bearish candle has broken below the yellow lower line here. However, look at the MACD. The histobars are getting lower, closer and closer to zero. They're still far away. The blue line has not yet crossed the bottom 45 level. It is, however, below the yellow sentiment. So I kind of would wait, or in this case, take a sell stop order about 10 pips below this candle right here. So below there, I take a sell stop, and if it goes lower, it's most likely going to meet up with the 50 simple moving average right here. So it's still got room to go down toward the downside, at least another 150 pips or so. And we're finally coming to an end. We've got quickly the U.S. Swiss franc. You can see we've hit a trend line. It may come down lower, but in this case, I would sell a pullback. What that means is wait for price to go back higher, wait for price to go back higher, and then look for sell opportunity. Last week gave us a lot of great pips, and I'm going to go back to the daily, okay? And let's zoom that. So you can see on the daily, the previous week we were in a major pullback, price pullback all the way to the not only to the 21 moving average, but also to a 200 simple moving average, which is a major line of support or resistance, and in this case, it acted as resistance. So price went up and finally broke to the downside again to resume its overall downtrend. See, here's the overall downtrend, pullback. With this black candle, black bearish candle, this was the evidence that we were looking for, getting in right there at the open of the next candle right there would have given us 160 plus pips. So again, this was a major mover, major mover, uh, and showing that the U.S. currency was one of the currencies last week that did lose, that did become a lot weaker against a lot of the other currencies. Okay, really quickly, you can see prices pulled back far away from the LEOD, so there's no further trading opportunities just yet. And US Japanese weekly, you can see sideways. So price is basically just going up and down, up and down. However, on a shorter term trend or shorter term time frame, we would have had a great opportunity to sell this pair on a pullback. Last week I did say price was going sideways. However, wait and sell with the evidence. To see what I mean, you have to go down to the daily chart. There it is. Again, look at that, eh? Price went down and then pulled back. One, two, three, four, five, six, seven up candles, bullish candles showing buyer strength. But then all of a sudden, boom, you see that black, bearish, engulfing candle? Well, that was the theme of last week. The engulfing candles were the trigger candles last week after the pullback phase ended for a lot of the currency pairs. Getting in right there, the next candle would have given you some pretty good pips again. You would have made at least 112, 115 pips. So that's where we are for this week. And I believe price is going to continue going down. Okay. So again, sell with evidence. Sell with evidence. You want to either, I would say, if you're looking at a longer term chart, sell below the break of this horizontal line right here. Okay, or wait for price to pull back up and then sell with evidence. Okay, and finally, there you go. You can see what's happened on the LEOD just to compare. So price did actually break with this black candle. It broke the lower yellow line. Okay, and it also broke below the trend line, which I have drawn in. So again, the LEOD charts are great to show you really quickly what's going on in the markets. And again, getting in at the open of the next candle right there, you would have made some pretty good profits. The blue line is below the yellow sentiment line, and the histo bars are also below the zero level. Okay, now I do want to talk just quickly about the cross pairs because I know a lot of you do send me some information or asking me about some of the cross pairs. And to look at the cross pairs, you also have to see which pairs are trending, which currencies, individual currencies, are becoming stronger, which ones are becoming weaker. And last week, the really strong currency was the euro, dollar, the euro, and the weaker ones were the British pound and the U.S. dollar. So, looking at the cross pairs, and with this in mind, we first of all look at the British pound, Australian dollar. You can see it's down, down, down. So, the British pound really weak. The Australian dollar last week showed some pretty good strength because it had broken a resistance area. So here's another pair that you could look at taking a trade to the downside. I believe this pair is going to go down lower. You may just want to wait for either a breakout, take a sell on a breakout, or wait for price to come back a little bit higher. Okay, this is the daily chart, but this is one This is one pair that most likely is going to be heading down lower. You can take a look to the left side of your chart where the next support area is. Next one is the British pound New Zealand, and again, you can take a look here. We had a huge black candle last week with this pair. Let me just zoom in a bit. You can see that right here. So I believe price is going to keep coming down, and eventually it's going to come down to the 200 because the 200 moving average is going to be acting as a magnet. It's going to be drawing price all the way down. So this still got a long way to go. And again, it's just a matter of how you're going to enter this trade. So we've got another 270, 300 pips to go. Next one for cross pair to look at is the Euro British Pound. Again, we're looking at the euro strength versus the British pound weakness. Again, take a look at this, eh? This is on the weekly chart. Again, I'll switch to the daily, and you can see price. I believe it's going to go much higher on this one here. So again, it's just a matter of where your entry is. Notice that price on the weekly has also gone above the 200. Okay, so price may go higher, but you may want to wait for a pullback. In other words, wait for a pullback and look for buying evidence to the upside. And the final cross pair is the Euro Japanese yen. And again, on the weekly chart, I believe price here, let me just zoom in, could go a little bit higher. However, we've pretty well almost approached the 21 moving average and this trend line right here. But I believe price could go a little bit higher. Let's go down. Let's go to the daily. There's the daily chart. You can see the histo bars are, oh, sorry about that. Histo bars are above zero here. It's pulled back. This is a pretty good idea right here. It's pulled back with the last on Friday of the last week. You may want to wait for buying evidence. In other words, again, waiting for the pullback to end and looking for one good bullish candle to the upside because we're looking at this area right here, the 50 moving average and the 21 acting as a support area. So finding one good bullish candle to the upside and then getting in, taking a buy trade to the upside again. So again, you may have somewhere, let me just use the crosshair. You may have about 170 pips to the upside when it meets the 100 moving average. Price may also go much higher to at least this trend line right here. I'll just draw that down. So it looks like this pair has got lots of room to go as well. So those are the cross pairs, just giving you some further ideas. And hey, I welcome all of your emails. If you've got any questions, send them in. If you want, even if you want me to look at another pair that I normally don't discuss, I'll be more than happy to analyze that for you as well. So take care. Be careful with your trading. As always, use stop losses, but happy trading and happy pip making. And we're going to look forward to the next video. Take care. Talk to you again soon. Bye bye.